Welcome to the B.F. Anderson Technical Report for October 27th. The VIX, it's a indicator, it's a tool that we can use as a way to determine how volatile the market is, because what I'm really adding a kind of a new dimension to my technical work where, we study price trends, we study volume trends, which means we want more buyers than sellers, and we also are going to be studying volatility trends. So there's really three things that technical analysis will help us with these tools. Now what I did is I went back and studied the VIX all the way back to 1990. Now what you see here is the indicator itself, and what tends to happen at the bottom of a bear market is you get a spike in the VIX. Like you can see here in 2009, we had a spike in the VIX. Volatility went through the roof, basically, got to readings of around 80. Market put in a low. Here with the pandemic low, VIX spiked to 82. Market put in a low. So even though we haven't seen a spike in the VIX, we want to be aware of the fact that when you get readings of around 21, that's been the long-term average for the VIX. And when you have readings above 30, it usually indicates that you're in a bear market. Now, this is a report that I would really highly recommend. Be happy to send it to you at any time. It's called the Agony and the Ecstasy. And it's the risk and rewards of concentrated stock positions. So basically what the report said that really got my attention was, it says if the volatility of your stock is rising sharply, chances are that its returns are falling. So what this study did was went back and looked at the Russell 3000 over a 25-year period and determined that, the higher the volatility, the lower the returns. So you can see of that 25-year study that the companies that did well had what they called semi-deviation, which means that they were deviant on the downside and they weren't deviant on the upside. So when the stock was dropping, the volatility really went up. So if you just look at deviation, that's both when the stocks are going up and stocks are going down. So the study here was just when stocks were falling. Now, we take a current snapshot of the VIX right now, and like I mentioned here, with long-term average around 21, we just crossed below 30 here recently, and I think we're starting to see things kind of settling down a little bit. In fact, this indicator that we use is now giving us a buy signal. We are getting a buy signal on this indicator. Now the rule is, this is the NASDAQ, the rule is we come up through that lower moving average and the lower moving average turns up. Now on the NASDAQ, which is having unique problems, things like Microsoft, Facebook, so forth, those stocks are really having a tough time. The lower moving average hasn't turned up yet. Now the rule is we're going to look at 5 indexes, and 3 out of 5 have to give a buy signal. So I would say the NASDAQ is neutral. However, on the mid caps, not only are we seeing the index get above the upper moving average, the lower moving average has turned up. So there's one signal. Here is the New York Composite, same thing, lower moving average turning up. That's 2 signals. Okay, here we have the small caps, which are actually the strongest acting. You can see here above the upper moving average and the lower moving average is turned up. So there's another signal. And then on the S&P, basically turning up, or similar to the NASDAQ a little bit, but I would say that's turning up. So we're actually above the upper moving average. Now we all know that this indicator there's no indicator that is perfect, but I would say this would be a good time to be looking around, maybe do a little bit of nibbling. We are taking on some positions at this time. Now one of the flies in the ointment is the aggression index. Now, again, we're measuring the NASDAQ, which is having more problems than the rest of the market, versus consumer staples. You can see there we're just not making any progress. In fact, it's somewhat getting worse. So, there is our indicator that we use here, which is giving us the buy signal. We're still not getting confirmation from the aggression index, but we're watching. Now, on the 3 economic indicators, see interest rates are backing off, which is good. Maybe things are going to change in that direction. The price of oil kind of flattening out. And then the bank stocks have actually turned up. So we're starting to see some improvement there as well. New lows, we're not getting down below 40 a day, but for the last, say, 2 or 3 days, we've seen, much improved readings from what we have been seeing. Now, on the bonds, if we look at the junk bonds, you can see here coming down, starting to kind of try to put in a double bottom here. We may be seeing some improvement in the bond market, which I think will be critical to get the stock market moving. So I went ahead and just took this particular picture of the junk bond fund we're using, which is called the HYG. You can see here kind of forming a double bottom in here, turning up above that 10-day moving average and actually breaking above the 50-day moving average. So we're definitely seeing some improvement here in the bond market, which, like I say, is pretty darn important. Now, also, keep an eye on this stock here called MasterCard. You can look at Visa, MasterCard, American Express. If we're going into a deep recession, I don't think this stock would be turning up. So it's turned up and it's broken above the 50-day moving average. So like I say, things are looking a little better. Trend strength is actually improving. We're at 12.5%, which is pretty much the highest reading we've had in over a month. So we're starting to see improvement on the NASDAQ. Then we're also seeing a 12.5% reading on the S&P 500, getting close to maybe a 25% reading, but not there yet. Now, I wanted to mention one of the areas that are really getting hammered here is the Chinese stocks. This is the PGJ, which is all the Chinese companies that trade here in the United States. You can really see that this particular group of stocks is really having a tough time. I would not be fooling around with Chinese stocks at this point. The yield curve continues to stay inverted, however, somewhat improving. So, like I say, the bond market may be showing some signs of life. Now, in the top 5, we continue to see a lot of strength in the energy stocks. You can see here we got a pretty long base here that's been building. You got the bottom of the cup, the buyers coming back in again. Now, remember, with technical analysis, what you're trying to do is you're trying to determine, are the sellers in control or are the buyers in control? So when you start to see readings like this, you have to say the buyers are pretty much in control here. Pharmaceutical company called Iveric, new high, actually moving up quite nicely. This is Prothena, which is a biotech stock. We're seeing a lot of biotechs at this point. You can see here, gap up buy signal, pretty much held the gap, now turning back up again and above that 10-day moving average. Stock looks pretty strong. This is Schlumberger, again, another oil service. This is oil service, whereas Devon was oil itself. You can see here, very strong uptrend. Stock is somewhat extended, so I would kind of want to see, in my opinion, I kind of feel that we would need to see some type of basing action, which would be very positive. Now, Shockwave, we do own this stock. This company has a fantastic technology. They announce earnings within about the next 5 to 10 days. So we'll have to see, but I hear they're going to have a very big quarter. Again, building a base, kind of tightened up, got good solid little base here, then gapped up, and then we're seeing another, not quite a gap up, but another move up. Volume wasn't as high enough for a gap up. It has to be 150% of average volume. So in conclusion, I'm simply saying things are improving. Maybe do a little nibbling, a little buying. I would hold my positions to about half what I normally would do, and just be careful. But I do think the market could potentially be putting in a bottom here. Thank you very much. If you have any questions, please let me know.